Okay, so good evening, everybody. It is Thursday, February 25th, around 6:30 p.m. An absolute day of carnage in the market. I have Austin here with me, former Citi portfolio manager. He has a ton of experience, and I always pick his brain about everything happening in the stock market. And today I was picking his brain about the bond markets because I wanted to get more understanding exactly what's happening on that front. So I wanted to make this conversation live to you guys so you can understand from a professional, really, how exactly these two different markets interoperate and how he is looking at the market going forward. So, welcome, Austin.
Hey, how's everybody doing?
All right. So we're all doing obviously all right because everything just started to get clobbered today. How are you doing? I guess.
Well, I'm doing great. I got a glass of wine in my hand, and like I probably said this before, I've seen this movie so many times that it doesn't bother me a bit.
Awesome. Well, that's great to hear because I would definitely like to understand, first of all, how you get to this mindset where you start to recognize that these are certain repetitive patterns that you've seen in history in the markets. And exactly what are you seeing right now that you think has been a movie that you've seen before? So, first of all, I'd like to kind of take us back to you know the market today, right? Were you phased at all at seeing the market go down this week?
Not really. I mean, I've been I've been expecting some sort of correction for the last few months, and about 10 to 15% type of correction, and it's very hard to time it when when Fed is so active. So uh, to 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 be honest, it's pretty normal course of the course of the game.
Okay. Well, so let's talk about all the conversations that are going on about the 10-year, the real rates. Can you sort of parse to us exactly what exactly are bonds? Why are they important, and why are we talking about them right now?
Okay. It is basically bonds and equities compete with each other, and bonds are basically a risk-free investments for investors. And if they're getting paid well on the risk-free side, obviously you are going to see a lot of money shift into the bonds. And on the other hand, when the rates are below par and S&P dividend yield is higher than what the 10-year treasury is yielding, then the money shifts to the equities. So, but uh, during this pandemic, the rates actually went down to zero.
Mhm.
So,
And when you say rates, you're talking about the real interest rates?
yeah, the real interest rates.
Okay.
And when the rates went down to zero, and I think the 10-year treasury was yielding absolutely minimal.
Mm-hmm. Yeah.
That created tremendous demand for the equities.
Because people are seeking yield somewhere else.
You got to understand, pension plans, there are a lot of institutions with trillions of dollars. They have to be invested. They have to meet calls for their retirees, and so they have to get some return. You know, actually, their mandate is 7 to 8%.
Mm-hmm. So they have to seek 7 to 8% year on year.
Exactly. So total return.
Okay.
To meet their minimum requirements. So the money has to go somewhere, and when the rates went down to zero, the money went into the equity market. They were looking for growth because there was literally nothing else out there that was producing growth other than tech. So you saw a tremendous run up in tech stocks. To valuations that these stocks were selling at 40, 50 times sales, which is very excessive. And knowing what I know is that sometime uh, when the valuations get so frothy, you know, you will have a very good correction to bring some reality into the process.
So what you're effectively saying is right now we are seeing that reality check
Correct.
where the bond market is now making its move higher and that money is being pulled away or people are taking profit in the stock market, especially growth stocks.
Correct. Because if you look at the three indices, literally the
So this is the NASDAQ.
yeah, the majority of the correction is happening in the NASDAQ.
So let's check S&P 500.
Yeah.
So SPX is, yeah, you're right. It's still holding up relatively well alongside this trend line.
So is Dow Jones, and so is actually the small cap, which is IWM.
Yeah.
So
So they're all holding up much better. So what that tells you is NASDAQ, because it's, you know, high tech growth stocks, it is getting sold off aggressively harder than small caps and S&P 500.
because since this pandemic started, the money went out of all these other indices and went into the NASDAQ because that's where the growth was.
Mm-hmm.
And now that now that we are getting close to opening up the economy again, people are selling these growthy names and buying value, you know, such as transportation stocks, Caterpillars of the world, and so on, thinking that there's a tremendous pent-up demand. And as the economy opens up, you know, these companies are initially going to grow at much faster than normal.
Because they're starting way at the bottom.
They're starting it from 0.0. So initially, over the next 2-3 quarters, these companies are going to do great. You know, the airlines of the world, casinos of the world, and so on.
Okay. So we spoke about the NASDAQ and transports this morning. So part of your lack of fear is because you think that the market is doing okay because growth is getting sold, but not all parts of the market is getting sold. Is that kind of correct? Would you be then paranoid if you started to see utilities and value and growth go down together?
You know, to be honest with you, I pay more attention to what Fed is doing,
okay,
than anything else. As long as Fed is still very accommodative and they're ready to back you if something terrible happens in the economy, that they will print more money, and they keep telling you that over and over.
Mm-hmm.
You know, to me, the rest is really a lot of noise.
So obviously, earlier this week, Jay Powell came out and said, "Hey, we're going to stay the course. No policy changes." That should really reassure investors anyway that, hey, the Fed has our back. If the market pulls back, maybe they might intervene.
Yeah.
And
he said they will, whatever it takes.
Whatever it takes. So then what exactly is happening in the bond market and why so much fear right now? Do you think any of it is rational, or do you think right now so far it's irrational fear and everything is getting sold?
Well, you got to remember that the rates went down to zero on this unbelievable fear when this pandemic started. The global economy is shut down. It has never happened before. So your rates are coming from zero, anticipating the economy is going to open up and things will get normal over the next 6 months. So you have to understand where the rates are coming from. The way I look at it, I think over the next year or so, we can anticipate about 3.5% in GDP. I would start to get worried if the rates start to hit 3%. Until that time.
So you're talking about the 10-year yield. You do not want it getting towards 3%.
Yeah, I would be very surprised if the rates go over 2%. And if they back up if they turn around from 2%, you are going to see a heck of a rally in the stock market.
So can you explain to us, so you're effectively saying that, okay, you feel pretty good about rates heading towards, say 150, 160, wherever they are. But if they get towards 2%, you want to start seeing them roll over.
Yeah.
Why is that? Can you unpack that?
First of all, about this time last year, we had a very quick 30% correction in the market. It was downright nasty. And the reason was when the rates went down to zero, the risk parity trade that a lot of these sovereign funds and hedge funds had it on, which means they were long S&P and short leverage treasuries.
So short bonds, basically.
Yeah, short bonds. That was the hedge. And they were levered about 2.5 to 1, which means there was a lot of leverage in the system. So when the rates went down to zero, literally they had no hedge, and their mandate stipulates that they must have a hedge on. So when that bond hedge did not work, they had to unwind this trade, which means sell stocks at any price and cover their bonds.
And that's why we saw that huge sharp sell-off
Exactly.
in the stock market, because they didn't really care what they were selling. They just need to get their hands on money, cash.
Exactly. So my thinking is that if now the bond market is starting to show some life, and that is also percolating interest from these funds that are not levered now. They're not levered, and they at around 2% or so, it would become very attractive for them to put on that risk parity trade again.
So if I'm hearing you right, so you're effectively saying that right around, say, 2% or so, if you start seeing a pullback in the bond market, you're saying that these sovereign wealth funds and other large institutions would be involved in shorting the bond markets in this area.
Correct.
And they were hoping, obviously, that the bond markets go down, and at the same time, they would go long equities.
Correct. They would actually increase their leverage if they don't have any leverage.
Okay, so that would mean that we might have another pretty massive leg up in the U.S. stocks if your plan plays out the way you're talking about it, which is rejection at 2%. These big funds get involved and they get to short the bond market at a pretty high premium price.
Right. Correct.
Okay, so then would you think that going forward, growth might be the attractive investment? Like, do you think that the market will once again be in the risk on phase where things like growth stocks and maybe even things like crypto might be the flavor of the rest of the year?
I just do not see, until you have rates so competitive, rates going up to about 3 to 3.5%. I don't see this growth trend stopping.
Mm-hmm.
You have these tech companies growing at the rate of 80 to 100% per year. You cannot find this kind of growth in any sector, period, except maybe crypto, which is also part of the same thing, part of the growth train. So I believe that what this pandemic has done, and I think I said this before, I said this pandemic would unleash the innovation that we have never seen in our lifetime. And this is exactly what's going on, that we have compressed time, that the innovations that was going to happen over the next 20 years literally happen in 6 months.
Yeah, that's a great point.
So I was listening to Jensen Wong, this afternoon, and he was so excited about the future as to what's going on. He said the first time that computers are writing codes that humans cannot possibly fathom, using AI technology,
That's amazing.
and then things are happening at such a rapid pace, so I'm a strong believer that the growth is here to stay for a long time.
So going forward, I mean, we talked about, right around 2% or so. You were hoping that is where the bond market starts turning around. And is the 10-year generally the
Benchmark
that you follow?
Yeah.
Okay.
Every morning when I wake up, I go on my CNBC app and I look at what the 10-year treasury is doing.
Interesting. Okay, good to know. We're gonna have to all start looking at the 10-year. Okay, so we talked about the bond markets, and you said the invalidation, you might start getting a little bit more paranoid if yields start going to 3%. But between 2 and 3, there could be a lot of pain in the stock market because we just are barely at 1.5 and we just saw complete carnage just unleashed.
Yeah.
So do you think that there might be, even more significant pain going forward?
Well, again, pay attention to what Fed says. If they start to worry about inflation, which they're not at this point, they're saying that they're totally in control.
Can you actually explain how inflation plays in this factor of the Fed and the bond market in the economy?
Yeah, well, in inflation basically, destroys the value of money. And how does Fed fight that? They literally take the money out of the system, making monetary situation tight. So they raise rates and whatever it takes to slow down the economy. And listen to what Fed says about inflation. If they start to talk about inflation, hey, inflation could be a problem down the road, that is the signal that these guys are now ready to start raising rates. And when they're ready to start raising rates, that's a warning sign.
Interesting.
And that's a time that we are looking at a significant correction in the market.
And at present moment, obviously, the Fed is not worried about inflation.
No, because globally, there's just so much excess capacity at the present time that it'll be a long time before we catch up with it.
Interesting. Okay. So what are you thinking about the rest of the year? You think that you're going to stay the course with mostly growth stocks, or do you think that right now you might start rotating maybe into value? Or are you just kind of on pause right now?
No, I mean, I've been over the last 30 days or so, I think I've been raising money, and I use a very disciplined approach to my investing. Since I'm a growth investor, I was telling you that I look at the Fed and as to what it's doing, and at a certain point, I basically let the price of the security dictate, what my action should be. And if the prices are telling me that, hey, be more defensive, which is the case, obviously, especially today, but it's been telling you, the NASDAQ has been signaling that, it's time to be somewhat defensive. So as of today, I'm almost 50% in cash. I'm holding on to my core positions, and over the next week or so, I mean, I don't care about the time frame. If the stock comes in that I really like and comes down to my price level, I'm going to nibble at it. I'm going to add to my position.
Mm-hmm.
So
So this is where, when
Because let me finish one point, that a lot of these good, fundamentally strong stocks like NVIDIA of the world, like PayPal of the world, these stocks will bottom out way before the market does, way before the NASDAQ does. These stocks will turn around and be up 20, 30% from their low by the time the NASDAQ bottoms out.
Interesting.
So you can't, you don't want to time it according to the number of days. Look at the stock price and do your due diligence and decide, hey, if the stock comes down to this level, I'm going to start nibbling at it.
Interesting. Can you give our viewers, some stocks to pay attention to? You said you like NVIDIA, right? You like
Definitely.
PayPal. So
I like PayPal. I like Unity. I like Twilio. On these cloud names, they went up the hardest and they're coming down the hardest.
Mm-hmm. Yeah, that makes sense.
Okay, but it's very normal for these stocks. They're up 100, 200% over the last 12 months or so. For them to correct 50, 60%, it's very, very normal. It's very painful, to watch it, but it's over the years, I've seen it happen so many times that it doesn't faze me at all.
So, when you have a strong belief in, say, your position in a stock, how do you deal with your emotions of feeling the pain that the stock is going down? I mean, how do you kind of avoid capitulation of wanting to sell?
Just like I don't get emotionally excited about it when it's going up. I have a price target in mind, and as long as the company keeps delivering the numbers, and then, it's just really, it doesn't faze me on the upside, and it doesn't faze me on the downside.
Yeah. So you have to basically be emotionless in the markets.
Yeah,
really.
Absolutely. You have to look at it as an investment. I don't make a monthly investment type of decisions. I'm looking at buying something for 4 or 5, maybe 10 years.
Yeah. Well, I think, Warren Buffett, I think, said it best. He said, if you are owning a company and, you should only own it if you are okay with it going down negative 50% overnight, right? I think he said something along the lines of, you should be invested in companies that you truly believe that you can hold on for the longer term.
Yeah.
So if it goes down like 50% in a week, are you going to still be okay with owning this company for the next several years?
No, you got to have a good reason for the stock to go down.
Yeah.
I mean, if they change their model and it's not the same story what you believed in initially, then no, I don't want to own it.
Yeah. That's a good point too.
So as long as some one of the employees blows up one of their plants and the stock goes down 50%, I'm going to buy more.
Right.
It depends on what is the reason.
Yeah.
If the market is taking my favorite stocks 50% down, no problem.
Fair point. So you and I have had a lot of conversations about crypto. It seems like you've kind of come around to understanding it a little bit more, maybe, paying attention to some of the other smarter people that are getting involved. What are your thoughts on crypto now? And, are you liking it? Do you feel like, okay, this might be something that's here to stay? What are your thoughts in general?
No. I mean, I think I mentioned that before. I said, I really am not smart enough to understand it fully, and I don't claim to be an expert. But when I see other smart people that I consider very bright start to step up to the plate, then I'm a player, So my thinking is the same. I'm seeing more and more the infrastructure being built around crypto, and I'm seeing more and more people getting their feet wet, but I always believed in blockchain technology.
Mm-hmm.
So I think that the technology is here to just unbelievable stuff in the financial world. So I'm looking for an opportunity to be a little bit more involved in the crypto space.
Awesome. Great to hear. So final thoughts. I wanted to ask you, I've often heard that, corporate treasuries, when they start making rash decisions with their money that they have, and rash decision could be, maybe something like Tesla and MicroStrategy buying Bitcoin, it effectively could be a very wise bet. It could pay off a lot, but it could also be really dumb, and it could really hurt the company, in terms of their share price. Because you and I have had this conversation about, you told me this story where there was an oil trader and oil analyst who was, I think, really long, and he sort of advertised his position, and then other institutions figured out, here is his breaking point, and they just destroyed the price to that point, which made him really capitulate his position. Now, corporate treasuries obviously have, somewhat of a responsibility still to their shareholders. So do you think that Tesla and MicroStrategy may at some point be put into this awkward position where if Bitcoin gets crushed down enough, they might have to puke out their position because who knows, maybe their stock, price is impacted too. Have you seen this kind of phenomenon before?
That's a heck of a very good observation, actually. And it's, I was thinking about this. I said, why are these people so silly? They don't have to disclose. And it's very dangerous, very dangerous. And
is it dangerous?
I've seen this movie so many times. When people get arrogant and start talking about their positions, it's a nasty world out there.
So it's effectively nasty because you've now put a target on your own back, right?
Correct.
You've announced your position. People know your buying price. People know, the average holdings that you hold. They know your cost basis. They know everything. And they know that your stock price is at X price. So all they really have to do is they don't even have to force, your stock down enough. Maybe, well, they could force your stock down and Bitcoin price down. And then, you'll eventually have to kind of, force close your position.
Well, here's what happens. Most of the companies will have line of credit with banks. And I'm sure Tesla does too. And there's always a covenant. These lines are, the lines are backed by the price of the stock, their stock price. Mm-hmm. And in those covenant, it says the stock must maintain certain level.
Interesting.
If it breaks, they must call the loan. This is what happened to Enron. If you go back in history, Enron was just fine. When people figured out that their line of credit, and they owed a lot of money to the banks.
Oh, wow.
Some of the short sellers figured out that if they can push the stock down to this certain level, and which was about $30, as I remember in those days, those lines would be called.
Wow, that's crazy.
And they were able to drive the stock down below $30 overnight. The next trade on the stock was down to $2.
$2.
Yeah, and then it was gone. They had to declare bankruptcy.
Wow.
So these are lessons from the history that that some people out there, I'm sure, are doing work.
Definitely.
How to get these guys.
And it's kind of like the saying goes, unless you have the deepest pockets in the world, like there's someone out there who's richer than you and more powerful than you.
Yeah. And those are guys can, band together and really hurt you.
Yeah.
And
this could also be, looking at it from, say, a longer term crypto perspective, it's like Tesla and MicroStrategy getting involved was a great thing, but now that they announced that they have these big positions, you not only have a target on your back, but you now hold a large piece of the supply. And if you now have to start, puking out your long position, you're going to have to just start selling on the market, right?
Yeah, that's what
and
happens.
that could crush Bitcoin price down like it did in March, where it just dropped 50% in a span of 24 hours.
Exactly. The story I was telling you about this friend of mine who was a natural gas trader. These people, once he announced his position, these people were able to figure it out what were the requirements by the Citibank, for holding this position. And they said if they could drive the price down to this level, it would automatically be sold by Citi. I mean, it doesn't matter.
Oh, wow.
Whether the manager wanted to sell or not, it was automatic. And that's exactly what happened. The guy lost hundreds of millions of dollars overnight, and the next day price was back up.
Wow, that's amazing. So just to summarize, I mean, let's sort of wrap it up here. You're not too concerned about, the 10-year going up. You will be concerned about right around 3%-ish.
Yeah.
You're for the most part expecting right around 2% or so in this pocket right here. You're wanting to see maybe the bond market start to roll over.
Yeah.
And that should be, by the looks of how it's heading up right now, it looks like it should be coming up in a week or two.
Mm-hmm.
Right. And if you do see that rollover, right, what you want to effectively see is bond market starting to go down, and then hopefully growth stocks starting to bottom and starting to pick back up.
Correct.
Okay. Let's see if we got some questions, and then we can wrap it up. And just to finalize, so for the most part, if you're seeing all these conditions being met, you're still relatively bullish going into 2021, because you still believe that inflation is not a risk, Fed still has your back, and you're not too concerned about the bond yields yet.
Correct.
Okay, perfect. We had a couple of questions. So where are your areas for a potential buying opportunity in NVIDIA, and where do you think that this stock could be a great buy?
I haven't started adding to my NVIDIA position yet, but I will add to it over the next few days or so. And I still think that 5 years from now, this company is going to be so huge. NVIDIA. I mean, literally, they are into anything and everything that is growing. And you got to understand about the chip business. Most of the chip companies are commodity companies, which means that if I'm using chips, I can buy it from this guy. These are proprietary chips, mm-hmm. which means once they're designed in, they're very hard to replace unless somebody comes up with a better mousetrap.
Yeah.
So if you believe in AI as I do, these guys have such a huge lead over everybody else, So I like NVIDIA, I like AMD, I like TSM, in the semi space.
Okay. Yeah. AMD looks really good too.
Yeah. Same thing. I think they're one of the most innovative companies out there. And I love their CEO. I'm betting on her to just, create a lot of wealth over the next few years or so.
Yeah. So I'm long in TSM, and you've mentioned TSM obviously several times. I got this idea from you. What are your thoughts on TSM right now? Still,
I've really nothing changed. I mean, these guys have such a big lead in manufacturing over Intel that NVIDIA, AMD, all these dudes, right now, their biggest problem is the capacity. They
Mhm.
cannot. They're trying to add capacity as much as possible. So what is happening is there's a shortage of semiconductors right now. You know, if you've been reading any press that uh, automobile manufacturers can't get enough parts. You know, Nintendo guys, I mean the game console guys can't get enough parts to meet the demand. And what's happening is they are building more factories to meet the demand. And what that means is you've got to own the semiconductor equipment manufacturer, semiconductor equipment guys, such as ASML, Lam Research. You know, they're two of my favorites.
Okay.
If
Yes.
and another phenomenon that's going on is America has realized that they cannot depend on foreign overseas suppliers to supply chips, so they are trying to bring the manufacturing here,
Oh,
which means they are building the factories here. That's going to require tremendous amount of equipment to build these factories. And so for the next couple of years or so, you know, my favorite stock is right now is ASML.
oh wow.
You know, they make their technology is so unique, you know, and if you're manufacturing that upscale uh, chips, that their equipment is a must,
Hmm.
you know. So
Yeah, they're what was it called? ERM machines or something?
yeah, what do they call it? There's a I can't remember the name of the machines that they use, but look at the chart of ASML.
Yeah, this is it.
Yeah,
XML.
so it's done a phenomenal. You know, how last time I was on with you, I think the stock was right here somewhere. You know,
Yeah.
it has gone parabolic.
Yeah, it
You know,
has definitely.
but it still has a lot of room.
Yeah. Fantastic. Well, it's been a great conversation. I think our viewers got a lot out of it. Let's see if there's any more questions. Um, any thoughts on DKNG? I think that's DraftKings. Are you at all paying attention to this?
Yeah,
You
no,
know,
I look at it. I mean, I think that you know, gaming industry is uh, I never believed it before, but I'm a believer now. You
yeah,
know, that you know, there are a lot more people involved in it. I don't have any position in it, but it's a very interesting stock.
yeah, it
You know,
definitely is. It definitely is.
I mean,
And
I was looking at it the other day. I said, if it pulled back enough, I may nibble at it too.
nice, great point. Let's see if there's anything else. All right. I think that's pretty much it. If none of our viewers have any questions, I think we're going to wrap it up here.
One last thing I was going to tell you is when the markets sell off, you know, make your watch list. Make the stocks that you really are excited about, and have the courage to buy. You're never ever going to buy a stock at absolute bottom, and nobody's going to ring the bell to tell you that, hey, this is a bottom, buy it.
Yeah.
You got to have courage to build a position. You know, start buying 1/4, and then if the prices go down, buy one more, you know, more shares. Or if the chart starts to firm up, then you know that maybe the worst is over, and you can really then you can start adding as the stock shows you strength. So that's a strategy. I keep it very simple, you know. Uh, and one thing is, I always do my homework ahead of time. I know exactly what I'm going to do tomorrow, you know,
Yeah.
and so it's nothing will surprise me, You know,
Mhm.
if the market opens down tomorrow, what I'm going to do, and if the market opens somewhat positive, what I will do.
Great
So I
point.
have a game plan every day.
Awesome. That's great to hear. Well, I think we learned a lot from this video. Definitely want to thank you for your time. Hopefully, you get back on and bond yields are rolling over from 2% and we're back in the bull market mode.
Absolutely. I mean, just not that I'm bragging about it, but had a phenomenal year,
Yeah.
you know, and it's one of very exceptional years in the last 10 years,
Hmm.
you know. So for market to take some back, that's the price of volatility that you choose to invest in,
Yeah,
you know. So it goes both ways.
totally. Totally. Awesome. Austin, thank you so much for your time. Hope to see you again and we will catch up with you soon.
All right, good luck, everybody.
Thank you.